This has not been the first time we've had this expectation or hope that we'll have tax reform, the so-called Trump trade. The markets go up, dollar strengthens, bonds go down, and then it gets discouraged. Is this yet another false hope?
It appears that we've had a handful of head fakes, so to speak, but the difference today is that this tax reform, despite the fact that we've seen a lot of people come across the screen talking about it happening, really isn't priced into the markets. Now, the markets rallied last year and they've continued to go up, so folks say, well, the Trump trade must be alive. But if you actually look at the different buckets within the market, companies in high tax industries that would benefit from tax cuts, they've been left behind. They've actually given a lot of that back. Companies that have a lot of cash stranded overseas that would benefit, they've given back a lot of those gains. And so these tax cuts really aren't priced into the markets. And probably, as far as, well, how does that impact investors? It means that a couple of sectors that really would benefit from these tax cuts would be healthcare and technology. Probably have a little bit of room to run as a result.
So what does that tell an investor to do as a practical matter? I mean, none of us can quite figure out what's going on in Washington. It seems to vary, not from day to day, but from hour to hour. And then you have something that's a real wild card like North Korea saying they want to destroy Japan today. How does the market price that in? Therefore, how does an investor invest with that range of possibilities in front of them?
Well, again, just trying to make any investment decisions based on what the government's going to do in the age of Trump is something that I probably would be super careful about. But from our perspective, we're value investors, and so given that there is so much uncertainty, and as a result, probably a likelihood of a pickup in volatility, one way to manage that or navigate that is to focus on things like dividend-paying stocks, the type of things for which capital gains can be positive or negative, but the dividend component of your return, that's always positive. You can't get a negative dividend, so that's one way of maybe a cowardly way of maybe avoiding some of that volatility that could take shape.